Has lost? Oh no, he's here. Okay, how are you guys? Nice to see you. Anyway, how did the market treat you today? Hope good. Euro is sliding right now because there are rumors that Greece is going to leave the Eurozone. Pretty interesting, right? Anyway, you know that the idea of the beginner corner is to create an environment where the starters in Forex or the non-professionals in Forex can find a place to take off their questions, doubts, and start with the basic information, okay? So we are going to review a bit about the charts, but we are going to see some interesting tips also, okay? Hope you enjoy this webinar. I will do a small and brief presentation, and then if you want, you will be able to ask as many questions as you like, okay? We have talked about the beginning of technical analysis over past webinar. We have reviewed the different kind of charts. So let's go briefly again over all those charts. There are different kind of charts, you know that, and how we understand then those charts is what makes us successful or not successful traders, right? At the end, what we are looking for in this environment, in this shops, right, is to determine the trend. You know that any profits or losses also are generated when markets are trading, right? So predicting trend correctly, of course, can be extremely helpful, and I believe it's based on all technical analysis, right? Despite many traders use candlestick charts to help them locate such trends, right? We are going to see not only the most simple ones, but only another way of reading charts that could be more useful when you are beginning. Sorry. Anyway, as you may know, the different kind of charts include this one that is a line chart, right? It just uses one piece of information, okay, only the closing price for each day. So in the case of the euro dollar for the daily chart, we are going to see a line using the different dots, okay, of the daily closes. As you may see, this chart is lacking a lot of information, right? We have no idea what happened intraday, what's the volume, what's the aims of or the sentiments of the market. We don't see if the bullish dominates the session or the buyers did it or the sellers. So there's a lot of information that the line chart is not providing us, right? So the next step or the next chart developed after this slide one was the bar of one. I will enlarge it a bit so we can see clearly all the bars, right? In this case, each session is represented with a bar, right? Where the top is the highest price of the day, the bottom is the lower one, the horizontal line at the right is the session close, and the horizontal line at the left represents the opening of that session, okay? It's pretty similar to the candlestick bar, but I believe that the candlesticks are finally more visual and more useful for our day trading, right? So let's go for the candlesticks part, and this is exactly the same as the previous one, right? We have the upper shadow that shows the high of the day, the lower shadows that show us the low, and of course the opening and the close and the color of candle will tell us either if it was a bullish candle or a bearish candle, right? The great difference in between this one that provides us a lot more information than the previous one is that just made it more visual. However, there are another kind of charts, okay? There are kind of charts that we can use in the Forex market. One is not very useful, but we are going to discuss it anyway, so you know what we are talking about. And it's the point and figure chart, right? It's quite an old technique used at least since 1880, honestly. Although the technique suffers lots of modifications in those days, the basic method is the same since the last 30, 40 years. So we can say this system is older than the bar ones that we actually was developed in 1986. And the major difference of this kind of analysis is that here we analyze only price, right? Without any reference to time. So despite we are seeing an add-on or a plugin in MetaTrader that helps us post the daily chart, the fact is that we are here with the point and figure chart not taking notice of time but only price, okay? It's a series of columns. In this case, it separates the columns or separates index because it's a plugin, right? But this columns will only draw green when price rise, and once the trend change will draw red, right? Again, maybe not the most useful, and that's why we avoid this particular one in the Forex market. The fact is that as the plugin is above the bar charts, right? You're also seeing in the opening and closest price in below the levels. But honestly, I don't like this kind of charts. There is, however, one ultimate chart that I believe you are going to enjoy a bit much more, right? And we are going to discuss also some couple of trading techniques using this Heikin-Ashi candles, right? As we said a few minutes ago, we need to determine the trend. The trend is when we are able to make more profits, right? And the advantage of this kind of Heikin-Ashi technique, this average bar in Japanese, right? Heikin-Ashi is average, is one of many techniques used in conjunction with candlestick charts to improve, okay, the isolation of trends and to predict, of course, future prices. That's all Forex is about. As we say, determine that trend is our main objective, right? So this Heikin-Ashi candle tool, right, maybe I'm able to provide us that edge. Similar to the Ichimoku indicator, the Heikin-Ashi has been a relatively unknown tool that has recently risen in popularity, even though it has been accessible since its introduction almost 2 decades ago. In addition to showing the relative strength of the trend, this application also notes key turning points in price action, and we are going to see that, okay? Incorporating the overall session activity in one candlestick, right? That is what we are doing in here, an average of what happened in that session, right? This type of candles tend to smooth, right? All those erratic fluctuations we are seeing in the currency markets, and usually these candles tend to omit the spikes that, I don't know, maybe sparked by a report, right? By some jumps in price triggered by volatility, by an announcement, by the raise in rates, a payroll, or whatever other announcement we made in the market. So this helps us to get a clearer picture of what's going on in the market and to make a more informed trading decision, right? We're going to take a trading decision based in more objective data. That's what's interesting about this candle. And besides, it's a bit more simple than the candlesticks because you see clearly when we have a bullish trend, and you can also see when we have a bearish one, right? So the trend is more clear at visual impact. So when we start trading Forex, it helps us a lot to use these Heikin-Ashi candles. Maybe they are not as simple to understand on the first glance, but if you get used to them, I believe you are not going to change them back for common candlesticks. Honestly, these are very, very good to trade. Anyway, the reason that these candles are smoother, as I was saying, is because of instead of using a simple low and a high of positions to calculate each candle, right? This takes the prices per bar and averages them to create this smoother candle. This is important, right? Because the currency market tends to offer traders more volatility and market noise in the price than other markets. Here is how each candle is constructed, okay? The close of each candle, the close level of each candle, it will be equal to the open price plus the high plus the low plus the close divided by 4, right? That will be the close of the candle. The opening is calculated based on the previous bar opening price plus the previous bar closing price divided 2, right? And the high will be the maximum value in between, of course, high, open, and close, and the low will be the minimum value reached that day, of course, in between low, open, or close, whatever it gets there first, right? Anyway, I prefer to use I usually use candlesticks. Well, that's why I'm saying. But I have a couple of intraday trading, daily trading techniques using this particular one. Okay, and I will share with you in a couple of minutes those techniques. I guess you are going to like it. Going back to what we were saying, right? This picture that we are seeing right now, besides being more visually, okay, it's help us to easily overall identify the trend. The positive candles, the white ones, right, that contain no wicks, okay, tend us to show you that the trend is very, very strong. There's enough momentum in the market, and that trend is likely to continue, okay? In here, the trader will have a hands-off approach to profit while strongly considering adding onto his position, okay? But these positive candles, the white ones, having wicks, okay, with shadows or wicks either side of them, right, are telling us that the strength continues to support the price action higher, right? However, at this point, with the upside potential still present, the investor will likely consider the notion of adding to the overall position. Why? Well, because its strength is given a bit up, okay? As longer the shadow to the upside, right? When the shadow is longer than the body, right? To the upside, like in these 3 daily candles we are seeing right now in euro, right? That is the moment when the trend is starting to get exhausted, right? If you see here, we have long shadows to the upside, and again, the trend was exhausted, and we will see the price reversing, okay? It's a very good tip that the market is, that the bullish trend, or the bullish momentum, okay, is given a bit up. Either if we are going to have a trend reversal or just a corrective movement, well, that's another thing that we can determine also watching at the candle. We are going to go to there, right? But I would like to add that a smaller candle body with longer wicks, right, similar to the dojis we see in Forex market, the doji candles formation, right, suggests a near-term turnaround, okay? When the candles are similar to dojis, they are telling us that there is a good possibility of a turnaround in the overall trend. As you may see, we have 2 of those altogether in the euro over the past couple of days, okay? And we have a small body with a long shadow first, and then 2 almost complete dojis telling us that there's a good chance of a trend reversal, right? So that is pretty interesting of this candle. Take a look at our here. We have 1, 2 dojis, and again a reversal. Of course, as in everything in Forex market, give me a second, I will move the chart. Nothing is 100% sure, right? But seeing here, we have a bearish trend, doji, bullish. Bearish trend, doji, bullish. Bullish, doji, and the pair turns bearish, right? So it's a good sign of a probable trend change, those small dojis, okay? What you must consider also, right, is that not any single technical analysis technique, right, should stand alone, okay? We can read a lot of information from this kind of candles. We can take a lot of decisions, but of course, you need an indicator to filter this, and you have to have a notion of the fundamental environment, okay? But there's no way that you are going to trade and succeed with just one indicator and no knowledge of what's going on in the world, okay? Markets are these days to influence and what's going on all around the world. We have a very globalized economy, so every single breath in one corner is has its consequence in the other. But meaning, this is just one tool that will help us see what's going on in the market, okay? Going back to the candles, right? The negative candles, the red ones, that contain shadows or wicks, right? that are telling us that the bearish momentum is supporting the price action lower in the market, right? And as a result, traders will want to begin exiting long positions or, on the contrary, start selling positions, right? While negative candles containing no shadows or wicks, right, that we are hardly seeing in this bullish trend in the euro, okay? We have not seen any red candle with no wicks, right? There has no been once that in the middle of this bullish trend, the candles have tell us that there was going to be some increasing bearish momentum, right? Because that's what negative or red candle containing no shadows or wicks will tell us, right? That the bearish momentum is accelerating. And if you take a look at this chart starting from earlier this year, right? There has been no strong red body candle with no shadows or wicks, right? And in contrary, and to the upside, we have seen this beautiful, enormous body. Okay. Overall, let's say that with this smoother picture, right, we can improve on trading the overall trend by combining, as I was saying, this Heikin-Ashi candles with multiple indicators. Okay. As with any other chart application, it's better to find an indicator that works well with you, okay? With your kind of trading, with your style, if you're a scalper, long-term, short-term, if you like to trade 1 hour, 4 hours, trend, cyclics, whatever. You need to find an indicator. I would suggest that when market is clearly trendy, like in this particular case, you can add an ADX, okay? That would be the best indicator to add. If the trend is not that strong, then maybe a stochastic oscillator will be great to try to find the signals to get into the market, right? But I would say in between those two, of course, if we're talking about pairs that have high intraday volatility as GBP pound, GBP Swissy, or those kind of process, I would suggest never to use some stochastic, right? Because in that kind of pairs, stochastic tends to saturate too much because of the high volatility across, okay? But keep in mind that you need to add an indicator that will depend on your trading style. As I said, ADX seems the best one to use in this particular case. As I was saying, this pair is this strategy, is pretty good to trade, especially those volatile pairs such as pound yen or euro yen. It is a strong, reliable indicator for intraday trading, okay? And I have mentioned scalping because I do believe that this is a good trading tool that we can use even in smaller time frames, even 5 minutes or 1 minute charts. Honestly, I have never tried a small chart. The smaller I have tested has been 30 minutes, and it has been quite reliable, right? But on the other hand, considering that in one hand that it lets you scalp, in the other hand, it's also perfect to ride the big and continuous trend, right? In the big time frames like the 4 hours or daily chart. So I believe that it's an alternate indicator, something that fits pretty well to different kind of traders and can be applied in several time frames. That's something very important about technical indicators, is that we may use a certain indicator and test it, right, in maybe the 1 hour charts, right, and we get one result, okay? But if we change the time frame, if we jump from that 1 hour to, I don't know, a 15-minute time frame or a 1 day time frame, maybe that indicator will not be so reliable, and with the signals we get there will be not as strong or the same percentage of winning trades, right? So take that into account. When you use a certain indicator and you have to backtest it, you have to backtest it in all the time frames you are attempting to trade, okay? Because it's not equally reliable in all of them. That's something that does not happen with this kind of indicators. Heikin-Ashi candles, Ichimoku Kinko-year indicator. We are going to talk about that any of these days. But in general, what I'm trying to say here is that test what you see and what you do. Also, something very important I forgot to add at the beginning, and I will make some brief pause before entering into a trading strategy, is the fact that different time zones offer different charges, right? In this particular case, I'm using a United Kingdom trader to give this example. If you are using the United States, Australia, or whatever broker you have platform, your candles may differ from this one because the opening and closing price of different days will be at different times and price will be at different points in different moments. So your candles, whatever candles you use, will differ from this one. Okay? In that particular case, consider the fact that anything that is said from this side of the screen must be tested on that side of the screen. Okay? You cannot trust whatever you see in this webinar, not even one, right? Because the different MetaTraders or the different platforms and the different time zones will offer different candles and so different results. Anyway, I will make a brief pause, okay, before starting with what it seems very interesting trading techniques, okay. We're going to see a daily chart trading strategy, right? That use this 18 candles plus, okay, we are going to add it right now, a moving average, right? 14 periods, okay, exponential, right? Apply to close, okay, there we are. We have that our moving average in there. We usually say that we have a selling signal when we have two consecutive red bars, okay? The moving average is turning lower, right? And the price crosses the moving average and closes the first candle, right? Or below that moving average, okay? Below that moving average. In this particular case, the first one has not closed below the moving average, and the moving average was not yet heading south, right? So honestly, there is not yet a long-term selling signal in this particular trading strategy for the euro dollar right now, okay? We need a second candle, okay? Anyway, we need to wait for this second candle, in this case, to break below this price, the lowest price of the previous one, okay? We need to wait for that. We need to wait for the second red candle to break below the low of the first one, okay? In this particular case, but you must see that has already happened because anyway, it's Friday, ending after payroll, not the best moment to take a trading position, but it is even an example of how the trading strategy works. So you can keep it for another opportunity. Anyway, once the price breaks below that low, we are ready to sell, okay? So once we are below 145.05, we could sell at, let's say, around 145, okay? This strategy usually tends to give us 100 pips easily. And as we can see right now, the 100 pips had already been taken from the market. It's a trading strategy that usually it's better to trade with double lots, okay? 2, 4, whatever you like, 6, 8, 10 lots, of course, regarding your capital, right? That's because we usually take profits at halfway. You have to close half your position, okay, at around 50 pips, right? And the second part of your position, you have let it wind to 100, and of course move your stop loss to that 50 pip to protect your gains in capital. That's the general idea of this trading strategy, okay? And on the contrary, a buying signal will come when we have two white candles along, right? The moving average pointing higher, right? The price crosses the moving average and closes the first white candle to the upside, right? In this particular case, what's here? right? We were in a bearish trend. Of course, we have to see a reversal, right? Sorry. Let's change that, the color. There we are. Okay, we have a bearish trend, right? And then we have a buying signal after this particular candle, because it's a first white candle, right, that crosses the moving average, and with the moving average heading higher, right, and we are closing above it, right? So I will be buying once this second one, right, okay, overcomes this 45.48, okay, and I will be targeting 100 pips, right? The pair did exactly that amount, right? I will close half my position there, right? And I will move my stop right to the entry and let run the other half of the position. In general, when we have a strong dominant trend, like in the case of the euro, right? In general, we could let the position run a bit more. But taking profits of half our capital, sorry, really quick and moving the stop to the entry point will help us protect our capital, which is, I believe, the most important thing we can do in the forex market. Okay, the idea of stop loss, right? the idea of the stop loss is to place it, okay, 2 pips below the minimum of candle, the previous one, okay? So if I'm going to get into the market around 45.50, my stop loss will be a couple of pips below previous candle, okay? And in this particular case, as you can see, it's very simple trading strategy. It has nothing more but one indicator, and it's highly reliable and mostly profitable. I would say for pound crosses, I will ask you to test it, but it's mostly profitable for pound crosses, pound yen, euro yen, and it usually works in pound dollar better than in euro dollar. I have tested several times. I have been trading with it a lot, and I can tell you that it's very, very interesting and simple and profitable trading strategy. Something different, something easier to start, to gain confidence. I don't know. I believe it's worth a try, okay?